This is the 8th stock that we add to the $1,000 per month dividend challenge. So this is episode number 8. And then this week we invested in ticker symbol ED, Con Edison. We're going to go ahead and analyze this dividend stock so that you can examine if this is a good investment for you. We're going to talk balance sheet, technical analysis, the company outlook, and all sorts of information that you definitely want to know. That's what we're going to be talking about today. What's going on? Welcome to another brand new video from the Flaming Profits YouTube channel, where we teach you how to become a more profitable investor in the stock market. If you're new to this YouTube channel, make sure you subscribe. That way you do not miss out on any amazing financial content that will improve your financial life. So yeah, make sure you subscribe and join the Flaming Profits YouTube channel. Also like this video. It really helps me out and it helps the video get to more people. That way they can enjoy this video and learn a lot as well. And leave me a comment down below if you have any questions. I do want to take the time to share some of our amazing referral links where you get some free money, free stocks. So for example, M1 Finance, a brokerage that I use every single day, they're offering free $20 as soon as you sign up. So a very good deal. It's basically free money for you to invest with. And then this is Robinhood. You get a completely free stock with them as soon as you decide to sign up. It's very easy to do. And then we have Webull. You get 2 free stocks as soon as you sign up. No reason why you should not do it. It's basically free money. You can sell the stocks and keep the money if you'd like. It's up to you. So yeah, take advantage of these deals. The links are all in the description. And then we also have a Discover secured credit card. You get 1 to 2% cash back on every single purchase that you make. And they're actually offering a $50 sign up bonus right now. So all you have to do is click the link and sign up, and you get $50 of free spending money, plus this credit card that gives you 1 to 2% cash back on every single purchase that you make. Alright, so let's get to this video. So this is Con Edison. Probably a lot of you have not heard of this company before, but they're absolutely huge. This is a brief description. We operate one of the world's largest energy delivery systems, founded in 1823, so a very old company. As the New York Gas Light Company, our electric, gas, and steam service now provides energy for the 10 million people who live in New York City and Westchester County. So they're basically like the utility provider for all of New York and that little county that they mentioned. So it's basically like a huge utility company that has a wide consumer base that they use their services every single month. So I love companies like this that are very well established and very old as well. That means that they're resilient and have gone through recessions, so they still continue to have business even during difficult economic times. So if we look at their Wikipedia page, just to get more information, they're the largest investor-owned energy companies in the US, with approximately $12 billion in annual revenues as of 2017 and over $48 billion in assets. So definitely a very huge company, and they have major subdivisions between Solutions, Energy Development, Transmission, Rockland Utilities, and the Company of New York. So very huge, and they have a lot of money to work with. They also have a lot of money to basically buy out other companies if the opportunities arise. And it was founded in 1823. It operates in the energy sector. Obviously, it's traded in the stock market, so you can invest in this company by buying shares of it. And the ticker symbol is ED, so feel free to search it up and do your own research. But it seems like a great company that is very well established, and basically they know what they're doing. This is a stock that I added this week. I bought 15 shares of AD, and I'm going to show you here. So yeah, 15 shares of Consolidated Edison. Equity is about $1,330. I'm up about $5.04 right now. Average cost $88.36. Let's go take a look at the buy rating and the sell rating as well from Robinhood. So buy rating, we believe Con Ed's dividend is secure and expected to grow over 3% annually for the next 5 years. Con Ed's entry into the natural gas infrastructure and electric transmission should provide some high quality earnings growth in addition to its New York utilities and renewables. So it looks like they're venturing into a new sector, and this is great because that basically means extra revenues that they might have not been used to in the past, and that's always good. You want to buy companies that are constantly expanding and venturing into new things basically. So now for the sales rating, New York's intense political climate means that achieving rate increases can be tougher than other jurisdictions. The density of population and age of infrastructure places additional risk on Con Ed for potential accidents that damage property and injure the public. So there might be some political issues that are happening in New York, and this could basically affect the performance of this company. There's always a lot of issues when it comes down to companies and the politics. So it's something to watch out for, and possibly a reason why you might want to sell Edison if you're holding the stock at the moment. But I'm leaning more towards the buy side, obviously, because I did decide to buy this stock, and I'm going to explain in everything else that I analyze. So the stock performance is probably the biggest indicator of the success of this investment. That's why it's the number one thing that I look at every investment. You want to make sure that you're investing in a stock that on the max chart it has an uptrending pattern, because your money is going to grow depending on the performance of the stock. So if it has an uptrending pattern over time, it probably means that your money is going to grow over time. But if it's declining over time, it probably means that you're going to lose money over time with this investment. So you see that beautiful graph, it's always making higher highs, and that's why I absolutely love this stock. It's always growing in value, and that's something I really appreciate as an investor. The dividend yield is 3.33%. The annualized payout for one share is $2.96. Payout ratio is 68.53. It's honestly a little bit high, but not too bad compared to a lot of dividend stocks. I'm just going to go for it. Dividend growth of 44 years. That is amazing. That is really good. Usually when a stock pays out a dividend for this many years and has consistently increased, that means it's a stock that is not going to stop paying its dividend anytime soon. They pay 74 cents per every single share that you own. So yeah, I absolutely love the dividend growth. It makes me very comfortable holding this stock for a very, very long time. So not only will they continue to pay it, but they're also going to increase it every single year. So now let's look at the balance sheet. If the company doesn't have good financials, it probably means that it won't survive a long time. So this is something very important. So the two main things is total assets versus total liabilities. You want to make sure the company has more assets than liabilities. And you can do the math. So basically you subtract the liabilities from the assets, and that's going to basically give you the net worth of the company. And this is very important for you to do, because if they don't have a high net worth, then that means that they're not going to be able to be self-sustained financially. And also having a lot of assets gives them the opportunity to be able to buy other companies with their own money and basically grow. That's what companies like Google and Amazon and all those big companies, that's basically what they do, is they have so much money that they can basically buy their competitors. And this is something that you need to watch out for and do for yourself. So yeah, we're calculating the net worth of the company by the liabilities minus the assets. So obviously they have a lot of surplus of money, $16 billion in extra cash. And now let's look at my spreadsheet. So yeah, I added 15 shares, dividend yield of 3.33. The monthly payout for the shares that I own is $3.70. So pretty good. The quarterly payout every 3 months, this stock is going to pay me $11.10. The yearly payout for holding the 15 shares is going to be $44.40. The pay per share, like I mentioned, was 74 cents. The average cost per share is $88.36. My total cost for this investment was $1,325.40. And I'm adding a new stock every single week in this series, so stay tuned for that so that you see how close I'm getting to $1,000 per month. So let's look at the final results for this week. So we started with the monthly amount needed of $1,000. Now we're at $960. So that means we're pretty much getting paid $40 per month for the dividend stocks that we hold now. So that is great. We were able to get from 0 to 40, and I'm documenting all of this through every single episode, every single week on Mondays. Now I'm getting about $9.95 weekly to be able to spend on dividends from my dividend stock. So slowly it's decreasing the actual money that I put in to buy dividend stocks. So this starts to create a compound effect, and it grows like crazy. So yeah, that's pretty much it. Thank you all so much for tuning in for today's video. Let me know what you think of this stock, ticker symbol ED. Do you think it's a good investment? Are you kind of scared of the future of this stock? Let me know what your opinion of this stock is. And also recommend me a dividend stock that I should add to this portfolio. Make sure it has a pretty good dividend, but also a very safe stock that you might enjoy and that you think that I would enjoy as well. So yeah, let me know in the comment section down below. Thank you all so much for tuning in for today's video. Leave me a like, comment down below, and make sure you're subscribed. Alright, peace.